All right, so Shaoping and I are here to give a quick recap of Berkshire Hathaway's 2023 annual meeting. Just a day ago, we talked about our preview, and now let's check in and see how it went. Now, I think we both felt optimistic in terms of how Warren and Charlie felt about the stock, about the economy, just about issues writ large. Charlie is usually a little more cranky, but he was basically optimistic. In terms of numbers, the GAAP earnings, the official accounting numbers were up, the earnings were up 6x compared to a year ago. But that's not realistic because that includes unrealized gains, and sometimes there are unrealized losses in a down year, and those aren't really operating related. So Berkshire measures its own operating earnings, which were up 12.6%, still pretty good. Now, if you dive into that, especially within the privately held portfolio of stocks, the ones that are not traded on a stock exchange, you found that insurance was the main driver of that. Insurance did really well compared to a year ago, and basically for two reasons. First was underwriting gains. Underwriting is kind of the main operating business of an insurance. Like, you get premiums, you pay out costs, to run the business, and you also pay out claims. They did well in that regard. They also did well in investment income. No surprise, when interest rates are up, insurance companies invest in a lot of bonds and bond-like instruments, so higher rates mean higher interest income. So basically good on an operating income basis as well. What did you think about the insurance? You were watching insurance, Shaoping, as like your hot button issue. It's kind of a boring hot button issue, but you were right to watch that because it was a key driver.
Yeah, I was interested in it because Buffett few years ago said that insurance was his favorite kid. That's why I was always keep my eye on it. So, however, if we look at the performance of the Geico last year, 2022, we can tell that it is one of the worst performers. So, why is that? Because of the telematics,
where they follow your phone around in the car to see what kind of a risk you really are in real life.
Yeah, so that's the key point of the underwriting profit, and they were left behind the Progressive, their biggest competitor, for about 20 years in telematic technology.
That's a long time to be behind.
Yeah. So they still need more time to work on it, and Munger also talked about it.
They're not very tech savvy, so they're going to take more time.
Yeah. So that would be a big challenge for them, although the first quarter of the 2023 shows a really good underwriting profit, but still, in the long term, they need to take some effort to catch up with Progressive.
If you're 20 years behind, you're not going to catch up in a year. That's a long-term thing. And part of my notes, I've got notes here. I'm not actually texting somebody while we're filming. China and Taiwan Semiconductor were other hot button issues. Buffett had bought Taiwan Semiconductor and sold it, I think, less than a year later. Sold about $5 billion of it, not all of it. So people pressed him. And right before that, they asked Munger and Buffett about China writ large. Their answers about China were very optimistic in the sense that they really want no conflict. They want peaceful economic collaboration. They said all the kind of the right harmonious sounding things. What's interesting though is that Buffett said, "Hey, I recalculated, I reevaluated basically my Taiwan investment, and I decided to bail." So he didn't give a lot of detail basically about Taiwan Semiconductor. He praised the company as he would normally do. He also praised Japan. They made a lot of investments in Japan recently. Was it five conglomerates that they added to within the past month, right?
Yeah.
Yeah, so they like Japan. They're big on Japan,
and they're still not done with Japan. They're
still not done.
Keep finding the investment opportunities in Japan in the future.
Another thing that we were wondering about was AI. And just investing competitiveness, and how does AI affect that? Net nets are, they still exist, as Charlie Tian from Guru Focus told us the other day when we spoke with him. There are a lot of biotechs trading for below cash, but that's rare. These days, investing is competitive. You got a lot of smart people, a lot of smart computer programs, and now especially AI. So the question is, how much alpha is left? And let me see if I got Charlie's quote right. He says, "My advice to value investors, get used to making less." But then Warren came back and said, Charlie, you're being too pessimistic. And to Warren's point, look at the crypto bubble. Look at the biotech bubble. Look at the tech stock bubble that we had the past couple of years, or maybe the past 10 years, depending on your perspective, right? There's still a lot of irrationality in the market. And I'm going to see if I got the quote saved right. Something about people are dumber now. Yeah, in the 58 years we've been running Berkshire, I'd say there's been a great increase in the number of people doing dumb things. So that sounds bad, but it's actually a very positive thing to say if you're a value investor, because you're looking for dumb things to exploit. So in general, they're not very familiar with AI, but they don't feel threatened by it. Was that your read on that also?
Yeah, exactly. Because people keep doing dumb things, and if people are doing dumb things, then there's opportunity for you to make money.
Exactly.
Yeah.
Smart people do dumb things too, and that's when you take advantage. Banks, another thing. They really didn't. They were more vague than I expected on banks. They didn't get too specific. They unloaded a lot of stuff except for Bank of America recently. And per Charlie, I think they're worried about commercial real estate exposure. And that's because in the U.S., 80% of the commercial real estate loans are held by mid-sized or small banks. And so go those banks, so go much of the economy. So I think if there's any lack of optimism around banks, or why they're not pouncing on some kind of quasi bailout, let's say, investing opportunities like Berkshire used to post 2008, let's say, it's probably because they're worried about the fundamental health in banks. That's my view. U.S. dollar, another thing on my note here. He says Buffett says there's really no other option for a reserve currency, and it makes sense because you kind of have to be a net debtor if your currency is used as a reserve. You can't really run a trade surplus, and he thinks that tokens and Bitcoin as use of a reserve is a joke. Last thing, the conference always starts with a funny video, and in this conference today, the video had a bunch of clips starting in 1994, then 1995, and maybe 97, 98, 96. Not every year, but most of the years, with people asking, hey, Warren and Charlie, you guys are getting older. What happens when you die? What happens when you die? And of course, it's almost 30 years later and they're still here. But Warren is almost 93 and Buffett will be 100 next year. So eventually they will die. And I think that's the key question, or the key question on investors' minds is, I'm not buying Warren and Charlie today. I'm buying the future. I'm buying probably Greg Abel, Ajit Jain, Ted and Todd, those guys. And how much of the magic can those guys keep alive? If I'm a business owner, I want to sell my company to Berkshire. In the old days, selling to Warren and Charlie was prestigious. I'd probably take a little bit lower price because I get other intangible benefits. But how much of that will remain after they die? I think that's the key question.
Yeah, it remains the question.
Remains a question, and hopefully we'll be back next year with some answers. Thanks for watching.